One.
Welcome everybody to the Chinchilla Pickin' Podcast. It is October 11th, 2022, 6:42 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and as always, I am joined by Brandon Beaver. Brandon, how are you, man?
I'm good. How about you?
I'm doing well. I want to start off by saying I apologize to everybody last week for not getting us a podcast out.
Me too.
There was a I want to say it's all my fault. I chose to be born last week, and everybody had like birthday celebrations for me. So
And I promise to get an episode out on Friday. I promised that to the TikTok followers, and we did not do it. We did not follow through. We did not land that plane.
Yep. So I apologize. We apologize. We're sorry. We're here now. We are here now after all the carnage. Maybe I might post some stuff on Instagram while I'm on the beach the rest of this week, enjoying my time.
So we have a follower on TikTok that is going to understand what this means. A little inside joke with me and the people I work with. We did not land that plane.
Okay. There you go, man. There you go. That's funny to me, even though I have no idea what you're talking about. So, yeah, we have a lot to cover. A lot has happened. We have a lot of news. There's a lot of negative news, a lot of bearish news, a lot of hawkishness from the Fed. So what do you say we just get into it? So rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. We do not discuss it. You hear the live discussion here on the show where we agree, disagree, argue, not argue, have a very communal time or not. I know Brandon's going first, and just for any listeners listening to this podcast right now, Brandon did not tell me at all what he's going to talk about.
Well, I did a little bit. We talked a little bit about semiconductors, but that's just a small portion of this. This is a big show that we have to get through because we've got 2 weeks with a lot of yeah. So I want to start with some statistics here.
I'm 66% of all statistics are wrong.
I mean, it could be that the American retail individual investor is becoming the intelligent investor. So
I always love a good book title thrown in.
Over 21% of individual investors' portfolios has been in cash since June. I mean, it's a good move. Look what's happening right now. It was a good move. The S&P 500 fell 9.3% last month. So here's some statistics. Fell 9.3% last month, one of its 10 worst monthly performances, going back to 1987. This was also the biggest drop since the COVID situation, since the 13% drop back in March of 2020. $81 billion was pulled from mutual funds and exchange-traded funds tied to stocks or bonds in September. $40 billion was just in the final week of the month. The average rate on the 30-year fixed mortgage climbed over 7% by the end of last week. It's expected to hit 7.125% today. Mortgage credit availability is now at its lowest level since March of 2013. So we're starting to see some cracks in the economy from the Federal Reserve raising interest rates. New foreclosure actions are now up 15% from July to August, but they're still 44% below pre-pandemic levels. So not a big worry there yet, but we're possibly getting there. The biggest thing, Dave, that I am worried about is U.S. debt.
Now, what type of U.S. debt? Because there's a lot. Are we talking about pension plans being and their margin calls? Are we talking about U.S. Sovereign debt? Are we talking? Household debt? What type of debt?
Treasury debt. Since 2007, the Treasury debt has risen 332%. It is now at $26.2 trillion. That is 67.5% of all of the money in the world.
It's a lot of cash, man.
Yeah. So here's the problem. Okay, so the US borrows in the US dollars, right? So the treasury debts are in US dollars, and the US can then print the currency, the US dollar, to pay back that debt, which is why it has historically been very safe. However, at 9% inflation, are we going to print more money to pay down $26.2 trillion because we're just going to increase inflation? Like, and then we're just going to keep it high. So what do you do with that? The director of the World Trade Organization is now saying, too, that the global economy is facing a multi-pronged crisis. The picture for 2023 has been darkened considerably. Sorry for
All
more,
right, so
sorry for
to
more
answer,
bearish news here, but it's not looking good.
right? So to answer your question, 2 weeks ago we had our show, right? And I said I don't know, if I'm going to stick with my October lows and say that we're going to hit that lows in October, or if we're going to go further. I didn't know if I was going to stick with that or go on. You were calling lows aren't going to hit till first quarter of 2023.
Yeah.
I I think as a whole economy, you're probably correct.
Yeah.
As the stock market, I don't know, man. I don't know. I might start buying in because last time I said I'm waiting. I might start buying in if we drop another 10%. I probably would start looking to buy in.
I'm like I'm telling you, I'm salivating and over Nvidia, and I'm trying to keep my emotions in check and just be rational about it and say, where do we have all of the potential problems right now priced in? Because Taiwan Semiconductor, they manufacture a large percentage of Nvidia's chips that Nvidia designs, right? And now you've got Chinese President Xi doing military drills off the coast of Taiwan. And he said publicly that one of his goals and his legacy is to take back Taiwan into China. But at the same time, you've got Taiwan Semiconductor looking to start manufacturing chips in Arizona. And if NVIDIA starts getting their chips from the Arizona plant, that should insulate them at least a little bit from that. So I'm starting to look at NVIDIA. I'm starting to look at maybe Intel's a value right now, but man, they've got so many problems. $40 billion for Intel is going to be spent across the United States to manufacture foundries here in the United States. And that's great because if China does make a move on Taiwan, then Taiwan Semiconductor's home plant will be lights off to the rest of the world. And that'll be a huge problem. But companies in the United States that are spending the money to build here will benefit. Companies in South Korea like Samsung will benefit as well, and because they're going to have to start taking on the global share of semiconductor manufacturing, and semiconductors will skyrocket in price if that happens. And I know that's just a big if, but if you have to, sometimes you have to take people at their word. And if that's this guy's stated goal, maybe maybe we need to start. Maybe the Chips Act is not a bad idea.
All right, couple things.
Unpack that.
There's so many things to unpack here. I'm not even gonna get into the Chips Act. I'm just gonna ignore that you said that. I'm gonna go back to
I mean, I don't like the cost of it. I don't like the government spending. I don't like government bailouts. I don't like cronyism. I don't like any of that stuff. But I understand the reason as to why you would see it as a national, security issue. Go ahead. Sorry.
I obviously you don't know what the word ignore means. I love that you're heated about it, but let's go back to where you're saying that you're gonna get hit into a recession, right? That we're gonna hit really, really hard. You and I both agree we're already in one. That it's gonna get a little bit worse. Some people say it's gonna get a lot worse. I believe that we are going to see more job cuts and more companies go under before this is over and done with. I I mean, listening to to Yellen right today on CNBC, and I watched her interview, and I listened to what that she had to say and how she tried to explain the fact that she got inflation wrong last year, and she was using Ukraine war as unforeseen and other issues as unforeseen. Yes, you could say the Ukraine war is unforeseen, but inflation was already starting before that. That just accelerated what was already happening. Um, so that doesn't put too much trust that they're going to do the right thing. I think that they're going to move more politically than strategically and economically since. Um, that makes me not have faith in that aspect of the government. So as far as like the recession part goes, yeah, we are going to get deeper. I don't believe we're going to get as deep as you believe. I don't think we're going to get as bad as you believe, but I do believe we have more downward to go. And I believe, maybe start slowly buying in. Put 5% of what you want to put in now.
Jamie
And
Dimon
then
was on
at, go
CNBC and
ahead.
he's saying S&P at 2,900 easily.
20 easily.
Yeah,
Easily.
yeah.
Ooh, man.
And he did
I mean,
preface it with saying it could hit 29.
so I got my long-term investments, but I got mostly cash sitting here waiting for the right moment, waiting for it to drop down some more right now. And 2,900, man, that's not just a little bit more, that's a lot more, man.
20%.
Yeah, that's a big jump. I'm looking at maybe 10,
Yeah.
not 20, but I mean he knows more than me because he has more resources than I do. So I don't know. I would maybe
So
split the difference and go 15. So that leads us into the Taiwan situation. So given that the global economies are looking head into a strong recession right now, especially Britain's on the brink of collapsing over there financially. And then that's going to have a ripple effect around the global economies, and that's going to ripple into ours, and ours is very fragile right now. And if China does make a move on Taiwan, that's just not going to help at all. That's just going to push everything deeper. And forget a recession, that's a depression.
yeah.
I see a depression at that point. I see we break 15% unemployment rate, and people just lose jobs everywhere.
Well, the depth that we just talked about for the United States as a percentage of our GDP is nothing compared to emerging markets right now. There's going to be a lot of emerging markets that probably go bankrupt. And
Oh yeah.
third world countries, if you want to call them that. I know that's not the right term for it, but just for lack of better of a term at the moment, emerging markets is what we'll say, I guess. But yeah, there's a lot of things on the horizon that could go negative. I
I
think
mean, but that's all on ifs and buts and what is, and we don't know, and that's the problem, and that's why a lot of us are waiting.
yeah,
We're sitting in cash because we're waiting to see what happens where. It's not going to kill me if I miss out on the first day of good news coming out and markets start moving higher, because
right,
I'll still have a lot more way to go
right,
afterwards. So I'm not
right.
worried about missing out on one day,
Me
you
either.
know.
Me either. Not at all. And yeah, what a difference. What a difference in 2 years. I mean, UBS is predicting an oversupply in automotives in 2 months. They're saying there's going to be a glut in supply, like oversupply in cars in 2 months. We are in a different world now than we were even a year ago.
Well, I mean, the supply chain opened up, and all this stuff that's been on back order is now coming in and flooding in. So, and I use this analogy of my local grocery store, how all the Krogers here are already moving from Halloween to Christmas decorations or holiday decorations, right? And I believe it's because they couldn't get enough Halloween things guaranteed in through the supply chain, that they overordered on Christmas, and that they're making that switch sooner because they just were running out of the Halloween things because they couldn't get it in, but they overordered on Christmas hoping for a good Christmas.
Right.
I mean, that's the only explanation I could think of as to why they would go that route.
Yeah.
I mean, it's not even it's October 11th, and we're putting up Christmas decorations all over. I mean,
so let's go back a little bit, take a few steps back here. Let's go back to Taiwan Semiconductor, because they produce more than half of the world's advanced semiconductors. They produce 90% of the most advanced chips. They're the exclusive producer of the semiconductors that power Apple's iPhones, AMD's CPUs, Qualcomm Snapdragon chip, which is used in many Android phones. A recent study has said that a 1-year disruption of production of semiconductors in Taiwan would lead to $490 billion in losses for electronic device makers. And by the way, that doesn't account for manufacturers and producers that aren't directly reliant on these things, and retail companies, data analyst companies. All we all use computers to do everything, right? So the effect will be multi-pronged and would be felt across the entire economy. That's for sure. Demand for semiconductors is expected to grow 80% by 2030. Now, if China was to take Taiwan, the US manufacturers that are spending today to develop foundries here in the United States would benefit greatly from that. So Intel spending $40 billion to build new foundries across the United States, and they are right now the largest investor of foundries to be built here locally. NVIDIA is exploring using Intel. They're considering it, but they currently use Taiwan Semiconductors manufacturing company, which I already stated that already, and Samsung Electronics. So if we can get Taiwan Semiconductor up and online quickly in Arizona, that would insulate NVIDIA a little bit. But TSMC, that's the abbreviation for Taiwan Semiconductors. They are involved in the operations of 300 companies worldwide. So a China takeover would be a huge deal to the entire United States. And for those who don't know, I've been using the word foundry for a long time. Semiconductor foundries make the chips in the world for hundreds of companies that design but do not manufacture their own chips. That includes Qualcomm, NVIDIA, and Apple.
All right, thank you for taking a breath there. First off, number of things here to unpack again. Is first of all, Intel is one of my long-term investments. I believe in Intel because they made those moves, and I'm down in Intel right now long term. But I mean, it's a long-term play. I wasn't expecting to sell anytime soon, so I'm okay with if I don't find any other investments soon, maybe just lower my dollar cost average a little bit on Intel.
Sometimes investors punish companies for long-term expenditures like this because it shaves off quarterly earnings per share, and that's short-sighted. And I think the Intel has been punished for these investments rather than rewarded so far by the market. But I do believe in the future they will pay off.
Yeah. And I agree. As far as Taiwan Semiconductor, they are huge. They are a huge force in the semiconductor world. And yes, that would have a big impact. I don't believe the risk is as high as everybody's saying, and it's just because of the treaty that the United States has with Taiwan. I can't see anybody pushing that right now.
All eyes are on Ukraine and what happens to Russia over Ukraine, because if this continues to drag out, and if Russia is punished harshly, and in which they are being so, then Zai's going to look at that and say, I don't want to be like that guy. I don't want to be like Putin.
Yeah, I mean, yeah, and he'll watch and see how the world treats Putin and all that. And the world's been very harsh on the economy of Putin, and those all those punishments that we delivered out so far are hurting the economy there, whether or not he wants to admit it or not. But having said all that, I believe Taiwan is relatively safe for right now. I would say at least this year, not and next year, at least guaranteed. So I'm not making any moves based off of that assumption. I would make more moves based off of a global recession or a global depression, a downturn, especially if Bank of England doesn't get their economy turned around. That's more of what I'm watching, because if they don't do that, the ripple effects, I believe, will go out everywhere, and that could affect our pension funds that are also have money out on margins and invested in derivatives. And so I would be more watching the Bank of England right now as a investor and financial person from a financial economic standpoint. That's where my eyes are.
And the pensions, the LDIs, which have notably been mentioned a lot more in the news since this show 2 weeks ago.
Right. And guilt. I mean, if you walked up to a retail investor 2 months ago and asked them what a gilt was, would they even know? But now everybody knows what a gilt is. Everybody knows what these LDIs are. Everybody, I mean, it's funny how we catch on to these things based off of bad news when something bad happens, and then we all start learning about it, and then we know it for next time.
Yeah, well, Warren Buffett once said that once the tide recedes, you see who's swimming naked, right? So when the market starts to pull back, you really start to see where the cracks are in the economy, and it's really hard to tell where they're going to come from and who's going to be really left pantsless in the whole situation.
Right, and after 2007, 2008, 50% margin was considered safe because the people were doing 100, 150% margins. And so they were saying 50% margin should be safe. Well, look what happened in England right now, and 50% margin is not safe if everything starts crumbling down. So that's still not a safe margin to have. And I wonder where our pension plans are, what they've been doing the past 2 weeks to secure up their side, because they got to be down right now too. Everybody's down right now.
Yeah, I don't understand. I mean, maybe with the big pension funds and stuff like that, it takes a while to move money, but you knew the rate rises were coming. Why are you still in LDIs? The Bank of the central bank in England today stopped their bailouts, and while that may seem harsh, I don't blame them. It was a bad move to stay in those going into a rising rate environment. We knew it was going to happen last year on this show. Two guys who are not central bankers knew it was going to happen on this show. Just about everybody in the world knew rising rates were coming. If you were still in LDIs, that's on you.
Yeah, and I agree. And bailouts are never popular with people on both sides, all sides. Nobody's ever fond of the government having to bail out anybody.
Yeah.
I mean, but you look at because what's that term where if you do it once, they're always going to come back and do it again. Moral hazard. Yeah. There's that moral hazard there, and but the problem is if you do let them fail, then what does that do to the economy? What's the other side of that?
Short term and medium term, it's terrible, but for the long term, it may actually fix the issues that you're trying to band-aid over with your bailouts. Because if you let them fail and let them go poor and bankrupt, they'll never do it again, and neither will anybody else. That's my opinion.
I mean, so yeah, all right. I get what you're saying. And I for the most part agree with you. I also see the other side of the coin there, though. Like, I mean, that's just gonna. I mean, it's funny because the people who are really against the bailouts are the poor and lower income classes. But if they don't do the bailouts, they're the ones that are going to be hurt the worst. Yeah. They're the ones that are going to suffer the worst. So they're the ones that are not going to be able to get the jobs. The upper classes are still always going to be just fine. And that's the problem is the poor class want us to not bail out. But I'm like, if we don't bail out, you're actually the one who's going to get trunched on.
Yeah, but then how much pain are you just kicking down the road? That's a whole discussion that we can continue to have, and that economists have been having for like 100 years. Ever since John Maynard Keynes became popular, people, Keynes, it's a long debate that you can have that has never been settled in the history of ever. So,
all right, fair enough.
I'm not ending the debate. You can still talk about it if you want, but
no. I mean, it's an economic debate. It's not really a political debate. It's all about economics and how they affect each other, and which one would you choose to help the broader market. I mean, but I do want to move into. I mean, knowing that.
By the way, even if Keynes would have seen the last 12 years, he would be freaking out, because the whole thing, like Keynesian economics, was you decrease interest rates, right, when the economy is bad. You raise the interest rates when it's good. That's Keynesian economics, because you're pulling back the purse strings and making sure that we don't crash. During the good times, you're bailing, or bad times, you're bailing out with lower interest rates. The past 12 years until this year, we've had low interest rates the entire time. We recovered from the Great Recession, and we just continued getting lower and lower and lower with it. So I don't, yeah. There's really been no visible economic theory at all uh, that's been followed by our government.
You know, and I remember in 2014, 2013, the argument was, why should we raise rates just so we have something we can use later on? That was the argument that was being made on TV. And it was like, you know, we don't need to be raising rates right now. We need to keep it low.
Yeah.
We need to keep quantitative easing happening.
Yep.
Nobody wanted to stop the free flow of money coming into the markets from the government, which was just printing at the time. But
That's the
I
first time.
remember it. I was there. I remember
Yeah.
watching the stock shows at that time, and that's what caused, you know, a lot of the issues that we're in now. But
That's when we first learned the term quantitative tightening.
yeah, right. So moving on, I want to talk about something that's a follow-up story from, I would say probably about a month and a half back, about a month and a half. A month and a half back, we talked about Boeing and how they were selling helicopters to Poland. And how Poland was going to have one of the largest military helicopter, the second largest military helicopters division in the world, behind the United States, of course, right?
Yeah.
So Boeing was selling them all these Apaches, and you know, we talked about whether or not that would be a good buy or good trade, or not good trade, and you convinced me it wasn't. You said
Yeah.
you did convince me on a show that there was other ways to play that, and not via Boeing
I'm
in
booing
that.
I'm booing Boeing, not Poland, and not their Air Force, and not their helicopter fleet. I'm booing Boeing.
So fast forward to today, Boeing took a nice little drop, based off the news that the United States, there was a push by Congress, a couple congressmen today, to go ahead and recertify the 737 Max and get that certification in, and it was denied because they need to upgrade some of the aspects for that the pilots see in the cockpit, and those weren't done yet. So Boeing did not get the 737 Max recertified. So those things were not met. So there was an extension looked at possibly filing. The problem is a lot of airlines who buy years in advance already bought some 737 Maxes, and Boeing can't get these airplanes to them to complete the sell because the United States and will not certify this plane to be in the air because of, and all right, I will say there was a good reason for this. There was three or four crashes, and there was a couple hundred deaths related to 737 Max. This was a couple years ago when these things happened. I think 3 years ago, wasn't it, Brandon? Somewhere around there.
Yeah.
But yeah, I mean, and that's what caused all these certifications. And let's take a look at the 737 Max. What's wrong with them? And we thought Boeing had got past this problem, and here we are still dealing with the problem years later.
It's a new headache every day with them. And then you find out that, like, you know, the some of the stuff that comes out, they knew it already. They just didn't tell you. And no, never buying them again. Not until there's a change in leadership.
Now, here, and do you think, and this is just an honest inquiry here, is do you think that some of those things that where they knew they were going to happen, and they just kind of hid it underneath the rug?
Yes.
Do you think that that's because they're pretty much the only major U.S. airplane company, and they knew that they're just going to get the deals no matter what?
I
And
think
so
they
that
I
they're
just
just kind of like, oh, we're going to get these deals. We'll fix it later.
I just think they didn't want their stock price to go lower. And they were hoping that they would, you know, maybe, I don't know, maybe they'd fix it before it got out. I don't know.
All right. So you're still, I hear and I feel like you're still negative on Boeing.
Oh, very much. Yes.
But this reseals the deal for me that after our conversation a couple months ago, I'm still gonna stay not buying Boeing because of this issue, even though they're selling a lot of helicopters. But that 737 Max is huge deals that if they can't complete, they're gonna have to pay that money back, and that's a lot of money.
Yeah. Yeah,
So
I
that's
don't want
really
to be
hurting them.
I don't want to be divisive on the show or political or anything, but Donald Trump once said, "What a sad story Boeing is, a once great American company." And that's when he was president. Did the president of the United States say that?
Right, and Bowen is in bad shape nowadays. They do need a shakeup in leadership at that company. I think that will help them. Talking about leadership at a company, the next company is a company that has had the same leader for a while and continues to lead this company, Meta. Meta. I know you wanted to say a few words about Meta. I'll let you head off here, but I do want to talk about their new VR headset and what it can do, and if that's going to be a game changer, why and why not. But did you have some comments you wanted to start with first?
We're in the process of being at the beginning of a recession, and Meta is cutting jobs, and they're releasing a $1,500 VR headset. And yes, I still own the company, and yes, I want to smash my laptop into my face right now.
It's with Meta, it's really the ad sales that is shrinking because people aren't really buying ad sales on Facebook like they used to. Instagram's doing well, it's up, but it's not making up the difference that they're losing in Facebook. And that's really hurting them there on these numbers here. And that's where the you see the switch at. And I don't think that's going to change anytime soon. I think that's going to continue with that trend.
I'm starting to wonder if Mark Zuckerberg is just too emotionally caught up in the idea to have any fiscal restraint regarding it. Yes, the metaverse I still think is going to be a big deal in the next 5 to 10 years, but is now the right time to release a $1,500 headset? I don't think so.
All right. So to be fair, yes, we are in a recession. It's a horrible time. People don't have that kind of money lying around. These things are planned out years in advance. So I mean, he could have held it off 6 months till the summer, had a summer release, but then people are outside. Nobody wants to put on a headset when they're outside. You know what I mean? So you always release them in the fall, right before the winter. That's when consoles get released because people are inside in the winter, and they're going to play the games more. That's the purpose behind it. I will say I'm going to buy the headset,
Okay.
but I might be one of the few that buy the headset.
So here's the thing. I want to know what your reason is, because I didn't get a chance to actually watch the introduction of it and his press conference, whatever it was that he did in front of investors and fans and all of that. I didn't get a chance to see it. So what are the benefits of the headset?
So, all right, let me give you a comparison you might understand, and other people listening might understand. When the PS5 came out, did everybody rush to buy a PS5?
We wanted to. We didn't have it.
Right? They didn't have it. They were sold out right away, and people are still sitting on like 4 or 5 that they're trying to sell for like $1,200 each, right? Yeah. So it's a huge demand. Why aren't you happy with your PS4?
I didn't have one. I had an Xbox One.
You get the point I'm making? It's like it's a newer version, it's updated. This is a newer version, and the updates are pretty good. So I'll give you another example of some of the updates. So there's an app out there called Tribe VR, and it's a DJ app, right? Where you could go in there and you could DJ. Now my daughter uses this app on our headset here, and I've played it in the app a little bit, and I've been messing around with it. I got it for her, not for me, but I've messed around with it, and it was kind of cool. But they showed it with the new headset, and with the new headset, you could pull up and you could have the same DJ setup board in front of you, but you could you could see the actual world around you.
Oh wow!
So I could DJ in this, theoretically in the headset, and I can have it Bluetooth to music out there for everybody else around me, and I
Oh,
could
that's
just be
cool. Okay.
DJing in VR, and I
I don't
could
know if
see
that's,
their reactions, and I could like if you were in the room with me, I could look at you, make eye contact with you, and see your reactions to what I'm doing in the virtual world.
you can see my physical presence,
Well,
like
yeah, and you could
my
do that
face.
now. You could do that now with the other quests, but it's only in certain modes. But with this one, it's clearer, it's better, and I can see it while I'm playing games if I choose to have that setting turned on.
Okay.
Or I could just be in the game. It's a setting you can mess with the settings to interact with the world around you, or just be in the game itself.
That's cool.
It is really cool. It allows it to be more of like a AR and VR mix, to where it's augmented reality, but also I could turn it to just virtual reality if I want to play a shooting game, and that one you would want to be just virtual reality. I don't want to see Brandon's head pop out in front of me as I'm trying to shoot the bad guys in the game. But it is a nice update. The vision's better, the sound is better. The control aptics of the controllers is much more fine-tuned. So
I think they need to figure out a way to get people's physical presence and the more in the metaverse as far as like work from home goes. These Zoom meetings I think are effective. We're on Zoom right now, which is good. If I'm late to a Zoom meeting, I get to see my boss's actual face or the facilitator's actual face, and I get to hear them tell me what they think about me being late. Now, if I'm in the metaverse and I'm getting Zuckerberg's version of the world and I see a cartoon version of my boss yelling at me, I'm probably going to start laughing really hard.
yeah, that is that's a good point. Right now it's just not quite there yet to have that realistic person in front of you. Graphics come a long way, and they come a long way fast. If you're as old as I am, I remember as a little kid in the 80s playing Super Mario World, Commodore 64, Atari, and then I see the games that people play today on consoles, and I'm just blown away by how the graphics come. But the more advanced we get as a society, the quicker those graphic jumps are going to become. And I believe this headset with the new lenses, the pancake lenses that they have in there, is going to allow you to game developers to develop games that are much more realistic than the old versions were. Do you understand? But you got to wait for the game developers to come out with the new games designed for that headset versus the older headsets.
Yeah. Okay. I'm still concerned with that price tag. I'm concerned with how much it may have cost them to make it if they had to make $1,500 their price. The previous Quest was only $400.
So let me go into like the breakdown of the price of this and why it's priced this way. And I agree with you; it's not going to be a big seller. Only people like me are going to be the ones who get it. It's not going to be one that they're going to sell out in stores everywhere. It's not, and I'm very negative on Meta for as far as the Oculus section of the company. I think this was a big loss for them to come out with such a high price system. They needed to keep the price low to bring people into VR. They
Yeah.
really did, and this was a big setback for them. And I think they're going to feel it in the bottom line here. But let's talk about why they price it this way. So everybody knows that Microsoft HoloFit Lens, it's a VR system that they developed for the military and government, is one of the leading VR systems in the world, and is probably better, I would say, than the Oculus, but you can only play with it if you're in the military. So Microsoft made a deal with Meta. We'll work with you and make your system better, but you got to allow people to use our software programs, such as the Microsoft Office suite in the new Meta headset. So that was some of the trade-offs, and in doing that, they created a great headset. They use some of the HoloFit lens systems, which Microsoft actually does make a profit off of, by the way. But those government contracts kind of do that, in order to make the Meta headset much better. And the Meta headset still, the Quest 2 and the Quest 1 and the Rift and all those ones that you've seen out there is still the number one VR headset in the world. Is the Oculus headsets. They're the most used right now. They're blowing everybody else away in the VR world. You're always going to get those hardcore people that have their own set they built and they hooked it to their PC. I love those guys. Those guys play great games and they do YouTube videos and they're great. But I mean, people want to play the people are going to use the Oculus because that's the one that everybody's user friendly with and easy to use. I don't think this one's going to sell though. You're right. It's just too high price, and the VR. They didn't get enough reach with the Quest 2 into the market and get enough people buying it to go ahead and justify jacking up the price this much on this one. They're going to lose out on it because of it. Unfortunately, because it does have a lot of great advances like that AR feature I talked to you about. I'm looking forward to doing that. I'm looking forward to having you come over to my house, Brandon. I'm going to DJ for you, and then we're going to enjoy that headset, and it's going to be a good time.
Nice. Unfortunately for me though, too, because I'm a long-term Meta holder.
Right. What else you have, man?
That's all I got.
Hey, well then let's go into our final thoughts. Brandon, go ahead.
It's just a different world than it was a year ago. And I do think that you could start putting some of your money to work. We've been saying this over the past couple of weeks. If you're a long-term investor, you got 10, 20-year horizon, then I think you're going to be fine with it. But you just have to, strap in, hold on your seatbelt, and it's going to test your more fiber. If we do have another 20% downturn in the S&P 500, it is going to be tougher than the first 20% downturn that we've already had. I have not sensed any capitulation. I haven't sensed any panic. I've seen some panic buying from short sellers who are covering their positions anytime there's a bear market rally, but I haven't seen any panic selling yet. Not to the extent that I would expect to see it. So I still think we're heading lower. And I think you just need to be careful with your investments and be very selective, but you can make some long-term plays right now. I think that personally, I wouldn't overweight it or anything because they've had some management issues and some debt problems and all of that. But Intel, Dave, I agree with you on Intel. I also like NVIDIA if they can get the majority of their semiconductors manufactured here in the next few years.
Cool. I actually agree with you as well that the market's going lower, regardless of everything I said today. I mean, about like us disagreeing on timelines. It is going to go lower. I think the only good call right now is a put. I believe that you could probably put a put on anything for a month out, and you're going to make money. I say that jokingly, hyperbole. It's a hyperbole, people. And I'm not being serious, but that's how I feel right now about the market.
The VIX just hit, I think it was like 35 that I was looking at. And that's been a resistance point for the VIX all year. So we may have another bear market rally coming up. And if we do, you might get into an opportunity to buy the ticker symbol SH, which is an inverse S&P 500 ticker.
There you go.
So,
yeah. SH. Yeah, so I agree with you on the semiconductors. Now's the time to start buying them. I know a lot of people who started buying NVIDIA around the 130 range. They're dollar cost averaging. If they listen to me, you're doing the 10% of what you plan to put in there. If you had $1,000 you wanted to put in, you put $100 a week, and you're gonna invest it slowly. If you're investing, if you're day trading, you're sitting on cash, man. You're sitting on your hands. You're sitting on cash because you're waiting. You're waiting for the right opportunities and the right news to move the markets. You don't need to make, if you're day trading, I want to be specific about this. You don't need to make 20, 30% in a day. You don't need those big returns. It's 5% a week is all you need to make if you're day trading. That's 1.5% 3 times a week on a trade. That's all you have to do. You do not have to do 20, 30%. All right. And that's how I day trade. That's how I always recommend for other people to day trade. Because when Brandon says, "Hey, didn't you buy this the other day?" I'm like, "Yeah, I already sold. I made up 2%." 2% is good enough if I'm day trading. 2% is not good enough if I'm investing.
And I'm like, maybe I should buy it, Dave. Dave got into it. The fundamentals look great. And I'm like, "Hey, Dave, what about this oil company?" Nah, I already sold it. I missed it.
I'm in and out, man. If it's a trade, I'm in and out. I made my 1 to 2%. I'm done. I'm good. So yeah, that's how I look at it. That's what I want to say, to be careful, guys. But other than that, let's just watch, man. Brandon and I both say it's going to go lower. Brandon says there might be a bear market rally. Don't be fooled. but it is going to go lower. So if you're looking at a bear market rally, it might be a time to make a quick trade, but don't hold in because it will be going lower.
Yep, I agree.
All right, guys. As always, we hope you've been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.